Well, good afternoon, traders. And for those people who stayed up to trade the FOMC meeting, well, certainly, in terms of the actual statement itself, I think that there was not a huge amount that was wrong in terms of market pricing and market expectations. We got the 25 basis point cut. The market was fully pricing that. We saw an end to their quantitative tightening program. That's the balance sheet normalization program. Most people had been anticipating that either at this meeting or one very close to this. That is a good thing for liquidity. It's a good thing for risk markets generally that we are seeing an end to that balance sheet normalisation program. But market was expecting that. We saw two dissenters, Rosengren and Esther George. Markets were kind of looking for one or two. They were both calling for rates to be left on hold. But certainly, we didn't hear anything that was too left of centre that really caused a surprise. It was only until Jerome Powell stood up to the press conference that we started seeing the volatility. Now, when Jerome Powell effectively came out and said the 25 basis point cut was part of a mid-cycle adjustment to policy, the market said, well, we're not expecting that. We were pricing in 66 basis points of cuts by the end of the year, 108 basis points by over the next 2 years. That statement in itself suggested that the rate by which the Fed were cutting did not meet the market pricing, and that's why we saw the US 2-year Treasury yield sell off aggressively. They moved up about 15 or 16 basis points or so. Dollar yen moved higher. We actually saw the dollar index coming out and breaking out a little bit. That was very, very strong. The dollar was higher against all currencies. S&P futures came down. The S&P and US equity markets came under pressure. And certainly we saw a risk-off environment with gold really coming off quite sharply, trading down to 14.10 in the end of that session. So market said, we didn't hear what we wanted to hear. There's nothing in that suggests that the Fed are on board with this easing cycle, and then they sold off a lot of what was already priced into markets. So certainly that was one thing we saw. Towards the back end of the session, though, we saw Jerome Powell pivot. It was almost like someone was actually talking in his ear and saying, look, market conditions are tightening, do something about this. The Fed are not taking on the market. The market is going to win this situation. And that's exactly what we saw. We saw Jerome Powell then try and walk back a lot of that statement, really coming out and saying that he didn't mean about the duration. It's not about the length of time. And effectively, he said that this is not a statement on how many times we're going to cut. It's more about the length of the rate cutting cycle. Market said, OK, we're fairly comfortable with that situation. It suggests that there are more rate cuts are on the cards. If I have a look at the reverberations that we saw in markets, we saw a nice snapback in rally, although that market's risk did finish lower on the session in the US. But if we have a look at the Fed funds market, we're pricing in a 63% chance of a cut in the September markets. So whilst we didn't hear exactly what we wanted to hear, markets are still of the belief that we will see rate cuts coming through, but they're certainly going to have to see new evidence of that playing through. Now, how's Asia traded on the back of that? Obviously, it was a big event. We're looking at Asia today. The interesting one on the equity side is what happens on the Nikkei. Look at the Japan 225, up 4 points. So we had a really negative lead from Wall Street. The market opened low. We traded down to 21,466. And then we've rallied about 1.5%, 1.1% from those lows. Part of that is down to the fact that dollar yen has broken out. Have a look at the daily chart, dollar yen, 109.20. That higher dollar yen is really obviously boosting the Nikkei. And as a result of what we're seeing there, you are seeing those S&P futures moving up. Look at our calls for Wall Street at the moment. That's looking quite positive in terms of where we were. Certainly the fact that we're up, given the negative tape, was certainly, we'd take that every day of the week. But certainly the fact that the Japanese market is now up, probably likely as a result of dollar yen being higher, is boosting some of our opening calls. You can see DAX is now at 13 points, so certainly coming off the lows there. China not liking what we've heard there. This stronger US dollar is something that everyone needs to be focused on. Have a look at euro dollar. We can see that euro dollar 110.48. Now we've been a bit lower today. We've been down to 110.34 as Asia's had a chance to react to this situation. But we broke through those lows, that sort of big support down at 111.02 to 111.07, and that's really taken it down. So euro dollar looking very weak, that dollar index looking very strong at the moment. That is not good for emerging markets. It's not good for anyone who has huge US dollar debt liabilities. It's obviously not good for gold. We're seeing that looking fairly heavy at the moment. But certainly Chinese equity markets under a bit of pressure there as well. That euro dollar getting a lot of trades today. In terms of other dollar pairs, I haven't got it on this board, but certainly dollar NOK looking really interesting at the moment. The NOK was the weakest currency in G10 overnight, and dollar NOK now trading at the lowest level, the highest level since January 2016. I put that on my chart of the day. Any kind of retest of that breakout level, I think, is a really interesting one there as well. As we go through to tonight's session, it's really all about the dollar. How is it going to react to the ISM manufacturing numbers? Those numbers come out at midnight Eastern Standard Time. The market's looking for that index to improve a little bit to 52. Some of what the regional surveys, like we saw in Chicago, suggest that the national number is going to probably come out a little bit weaker than that 52. What will that mean to the dollar? What will it mean to rates as we go into the non-farm payrolls tomorrow? But certainly the manufacturing numbers in the US, I think, is going to be really key. As it stands at the moment, the Nikkei has come off the lows. That's allowed European and US markets to pick up, but it's all about the dollar and those dollar pairs at the moment.